Hello, welcome to Super Return Asia. I'm Sarah Clark in Hong Kong and I'm joined by Diana Choyleva. Thank you very much for joining us.
You're welcome.
Now, you're the Chief Economist at Enodo Economics. Let's look at China, make or break transition. It's the world's second largest economy, but one of the most misunderstood and complicated. Will it weather the increasingly brutal trade war with the US?
It will be extremely difficult. In fact, this is probably the biggest challenge China has faced in terms of its economic growth model and transformation since it started opening up 3 decades ago. The danger is that actually this is a lot more than just a trade war. This really is a fundamental geopolitical conflict that is not going away anytime soon, and it's coming at a time when China has significant domestic challenges to overcome. First of all, the buildup of debt over the last 10 years and the risks it needs to deal with in its financial system. Second, the fact that it needs to rebalance its economy away from exports and investment, which was the growth model before the financial crisis, towards consumer spending. And it had made important progress in that direction in the last 2-3 years, but that rebalancing is not yet strong enough to weather what is really a significant deterioration in the external environment.
Okay, so you said it's one of the biggest challenges, if not the biggest challenge that China has faced. Will it survive? And who will win? Is there a winner or a loser in this conflict?
It is a make or break transition because actually it is really difficult at this point in time to figure out whether China would make it through. What I'm looking at is the return of the Cold War. This is a version of the old Cold War. I call it a digital Cold War. And it's likely to produce over the next decade a bipolar world of influence. There is a way of this breakup to occur without necessarily an Armageddon scenario and both sort of types of systems to coexist, but they will only be able to coexist under a very different set of rules and under a very different structure of the global economy than the one we have now. Because the one we have now was largely created to cater for a market economy. And China has not become a fully fledged market economy and has stated quite clearly it has no intention of converging on the Western liberal free market system in terms of the economy. Let's forget the politics. And because of that, this breakup of the existing global system is going to be very disruptive. It's difficult, it's really difficult to see how will that transpire.
Well, technology is at the heart of the US-China trade war and Trump is attacking this main growth engine. Will China concede some territory, do you think, on trade to advance its tech ambitions?
Yes, they're much more prepared to concede on trade, but they actually significantly underestimated not just Trump, but also the bipartisan change of attitudes towards China in the US. And even if Trump were to disappear tomorrow, this geopolitical conflict is not going away anytime soon. And it is all about technology. The trade is almost the sideshow, and it's not what America places the most value on. So at this stage of the conflict, China has no intention to concede any ground on technology. But we'll have to see how this develops over the next few years.
And looking at China, well, do you think China could use its currency as a weapon against the US in this trade tussle?
It can use it, but it will be a last resort. If they were to use it, it really would be standing up to the US and waving a very big red rag to a bull. And my assessment of where China is in terms of its economic transformation and its craved self-sufficiency, which it hasn't yet achieved, it is not ready to fully stand up to the US. And what we have seen in the trade conflict so far is its a tooth for a tooth in terms of China's retaliation. They haven't escalated it to an eye for a tooth. And if from these levels, because the yuan has already depreciated quite significantly against the US dollar, kind of eliminating the appreciation of last year, if they were to have another 15 or 20% depreciation from here, that would really be then an eye for a tooth.
Okay, all of this at a time when Beijing's trying to deleverage and de-risk its financial sector. How are Chinese policymakers managing to keep their economy afloat in such challenging times?
They've been extremely skillful at sort of creating markets where markets were still not existing or still don't exist in China. One of the major transformations that has been going on in the last 2-3 years is what they call their going rural strategy, where they have been largely through e-commerce being able to unleash the untapped spending potential of rural areas. And we've seen a huge support to consumer spending from that direction. So that really is the good news. There has been obviously the usual support and from state sector investment, but it is only in the last few months that the authorities have sort of turned on the taps of fiscal spending. And so far they're not turning them fully on, which shows their dedication towards the de-risking of the financial sector. But with the external challenge on top of the de-risking, it's becoming that much harder.
Okay, well, China is opening up its financial sector to foreign investors. What's it trying to achieve by taking this step?
It is opening itself to the world, but only in inviting foreign direct investors into its capital markets. What's clear-cut is that it has no intention of allowing Chinese individuals or corporates to invest freely abroad. And this one-sided opening is not going to work, neither for the global economy nor for China itself. In some ways, it envisages that, I guess being cynical, that foreigners will pay for some of the debt cleanup that they have to do, and they're already doing. But really to properly integrate its economy into the global financial system as it is, it has to allow the free movement of capital in both directions, and it has to allow the market to set both the exchange rate and the domestic interest rate. And it is not showing any indication that it's truly moving in that direction.
And following from that question, do foreign investors have the appetite for investing in China?
We advise largely fund managers across the world, and my experience is that even though foreign investors have become less worried, if you'd like, about China than, let's say, in 2015, their appetite for investing in China has gone down, largely because they misunderstand this economy and they mistrust it.
That's very true. Thank you very much, Diana Choyleva, for joining us.
You're welcome.
Thank you also for joining us. And if you want to see more conversations like this, go to Twitter and look for #SRAsia. Bye for now.